Good morning, guys. Hope y'all have had a good week so far. It is Wednesday, February 13th, and I'm just coming to you with a couple of picks today from earnings, as well as just a recap of the market overall and the trading the past couple of days. Monday didn't really have too much in the way of earnings, and I didn't take too many trades Monday and Tuesday, so not too much to recap, but we'll go over it nonetheless. So first of all, I just want to give you guys a view of the market in general. The S&P 500 is has recovered all of the pullback that it had on during the midweek last week. So the rollover that it had at the 200-day moving average just lasted a day and a half, really. So you can see here it recovered quite a bit. And then has actually exceeded the high that it made last week, and has crossed through the 200-day moving average and closed there. And this morning, it's also, if you take a look at the ES, it's also going higher. Yesterday, there was actually, you can see here, it's going higher today as well. Um, so yesterday, there was some news in the U.S. In the way of um, a government shutdown being averted, as well as some uh, improvement in the flexibility with respect to the U.S.-China trade talks. So there was some good news, for the markets. They took it positively, and so it was quite a big rally yesterday. And then today we have some continuation. And there was also some other uh, there were also some other news stories that came out that were lent to the positive tone of the market. But overall, there, the S&P has kind of bounced right here off of actually this trend line, which is a longer term trend line on the ES futures. If you look at that, it's a longer term trend line here, all the way that kind of goes all the way back to, I believe, 2016. Yep. So um, this is a complex trend line. You can see it bounced. It has bounced a few times previously on this trend line. Of course, it broke down through it. It acted as a little resistance here, and now has turned into a little support. So it's not really a precise trend line, but it is a complex trend line. You can see from back in 2016, which is acting actually now, if you take a look at it, as a little bit of a level of support. So we'll see how it acts, how the market acts going into the rest of this week and next week. As we talked about a few days back, we have this whole area of consolidation right here, which it's right in the middle of right now. So we could technically get up to the top of this range, which is up here at around 2807, 2808 in the S&P, E-mini S&P futures, and it could, you know, make it up there. Actually, it's not too far away at this point, just about 50 points. So that's the next target on the S&P 500. This area right here. And at that point, we would be expecting to see a little bit of a retracement, um, which I would assume would be bigger than this little couple of like day and a half move to the downside here. So I've taken off my call spreads because they're pretty much right about to be crossed through. Um, I take if it goes quite a bit in the opposite way of my trade and through the stop, basically I'm going to be taking off my position, even if they're call spreads or put spreads. In this case, my stop was of course the top of um, this bar here, which was the prior high. Yesterday it crossed through that and closed there, which was to me, kind of negative for my position and a bullish sign on the market. So I had a couple of call spreads I had sold, so I went ahead and bought those back in. So we'll go over a couple of the trades also that I have been holding that I've gotten out of some of them, um, based on the action of the stocks, and then we'll talk about a couple of trade ideas for today based on earnings. So the first position I will speak about is FireEye. So FireEye, we had talked about this at earnings. The earnings report was back here last week on the 6th, between the 6th and the 7th. So you see the big gap down, and then of course my what I was going to do is watch this stock just till I was actually looking for it to continue down to this trend line here, and then bounce, and that was going to be my entry point on the stock for a short-term swing trade. It did not. It did not do that. Actually, it got it kind of on the day after earnings, the day of earnings. It definitely just consolidated towards the bottom part of the range, and then the next day, which was Monday, sorry, it was Friday. It did kind of peak down below um, the 1603 pivot. You can see here it spiked down and then recovered and kind of grinded higher throughout the day. So that was Friday. So I did not buy any on Friday because I don't like to hold things through the weekend like that for swing trades. So what I did is Monday I waited for it to, I thought it was actually maybe going to show a little weakness, but it didn't. In fact, it showed some strength Monday. You can see here, a very tight consolidation right off the open and a little red to green pattern on the 5 minute, and it broke above the day's high right around here at 1646. But I actually waited for it to cross above the high of the day of earnings, which would mean that it would be coming into the gap here between the pre-earnings, the day before earnings, and the day of earnings. So this gap. So I was buying it for a gap fill. If you were aggressive, you could have bought it right here in anticipation of entry into the gap around 1647. I entered it here at about 1661, and actually, if you take a look at, in this area here, I actually uh, have sold this position already. I don't think I have an arrow where I actually sold it, but I'll tell you where that actually happened. The way this little double top here yesterday, um, yeah. Let me just pull this over so you can see it. So the double top that it made yesterday, this kind of large double top right here, I sold that stock right below the midpoint of this top. So just here, um, let me put an arrow so you can actually see where I sold the position in FireEye. Yeah, right there. So I missed a little bit of the move to the upside, but I mean, that's it's like 17, 18 cents there, which in a stock that's only $17 is a lot. That's 1%, but I with the topping pattern and a green to red move, which was pretty significant here, you could see the big red bar on high volume. Um, I just didn't think it was worth it to hold it, so I've actually sold out of it. I mean, it could possibly go resume to the upside and try to fill this gap. But it already had, I mean, this is a pretty much a 50% retracement of the move that it made after earnings. So it was a pretty good point to take some profits. So I went ahead and took my profits. We'll see how FireEye acts. Maybe it'll consolidate and resume to the upside. But for now, I'm out of the position. Additionally, Array Pharmaceuticals, I was holding on to my very last piece of that stock as well, in the way of an option. I had sold two-thirds actually of my position a couple of days ago, last week. I believe, just move this, yeah, on the 7th. Where you can see here it says I sold two-thirds of my position, which is 2 out of 3 options. I had some call options on the stock. 2 out of 3 options here. I gave it a chance to kind of consolidate and maybe come back up again, but it never did. So I actually sold it down here at the bottom of this range on Monday. Could have gotten a little bit more if I'd have been patient, but it was breaking down. It had already broken down below this low of the day that I sold my first piece, so I went ahead and sold the rest of it. I mean, it was a good trade. I bought it, right here in this area on this breakout, the option. So I got some profit, but I let that last piece run because it was showing some strength. Granted, this big topping tail was a little bit of a bearish sign or a swing, a sign that there would be a bit of a swing to the downside of the stock, rather, a pivot point here. So, originally my target was up here at this trend line. It didn't quite make it up that high, but it almost got there. And actually, this topping tail here is a really good indication of a swing in the chart, right there, a pivot in the chart. So I could have probably sold both positions the rest of the position the next day, but you see it started trying to show a little strength, so I just held on to it. Um, so that's Array, but I'm out of both of those positions. I'm still in Tilray. As you all know, I have an option on this. It's looking pretty weak right now, but it hasn't crossed below 70, so my stop is right in this area. So I'm maintaining my position here. It's not looking so hot at the moment, but this stock is pretty volatile. It's a cannabis stock. The other um, the other cannabis stocks here, you can see Kronos. Uh, just consolidating off of a pretty big move. Canopy Growth, um, again, it's come off of a pretty big move, and it's just in this area here, consolidating. It looks like it's going to be up today too. So with Tilray, I'm just looking for the same, right? Maybe uh, as these stocks start turning around and going to the upside, Tilray will follow suit. If you take a look at the ETF uh, for the cannabis stocks as well, you can see it also has kind of double topped a little bit up here, not double top, but hit this pivot and kind of failed and is just resting here on its 20-day moving average. So we're going to give Tilray some room and go from there. So the next couple of trades that I wanted to go over with you that we were watching. Uh, we're still watching for potential moves to the downside. So Expedia, this is a stock rather that had an earnings report back on Friday, well Thursday after hours, and it spiked very high up here to 144.10, and was weak right off the open. I didn't actually buy it or short it rather here because of this huge spike. Had it moved a little bit slower, I probably would have bought it. Excuse me, bought a put or shorted the stock here. You can see it had a big spike to the downside, came right back up to the 50 moving average on the 5-minute chart, and continued its downturn. On Monday, also was another opportunity to get in this stock on the short side, as it had a big move to the downside Monday morning and has just consolidated here. Um, so looking for uh, the continued resistance at this trend line, and potentially a further move to the downside. Uh, you know, it is a pretty big move already, a pretty big reversal here. From that 133.68 pivot, and then even down below the 128.86 pivot. So we're looking for some continued weakness in Expedia and an opportunity to potentially short the stock. But with the strength in the market, we'll have to see how it acts, right? So maybe it'll come back up, and hit the 128.86 level. And if it shows some resistance there, that's a good opportunity to maybe get into the stock short. So that is Expedia. Next are a couple of stocks that had earnings the past day. So yesterday we had a couple of stocks report earnings. We had Molson Coors, which is TAP. You could see that had some weakness. So if you wanted to take a look at the stock for a potential um, bounce trade, if it gets down to this area in the 56, 55, 56 range, wait a couple of days after earnings, see how it reacts, but it could show some weakness and give you an opportunity for a bounce. Also, Shopify, Shop. It is actually it actually I actually missed this one. I didn't take a trade in this stock, but you can see it had quite a bit of weakness off the open. After the earnings, it had a big gap that it actually totally filled yesterday, which was after its earnings were reported. So it would have been a good trade over the first 5 minute high or 1 minute high for a full gap fill. Actually, it did a really nice gap fill yesterday. Um, and Under Armour, which is actually one I took a trade in off the open. Once it showed strength, wasn't intending to because it wasn't really acting great in the after hours. You see it spiked up, and then it kind of went all the way back down, spiked up to this pivot here of 21.89 in the pre-market, and then showed a lot of weakness. Um, and then the way it acted in the morning, though, so you can see here, it had a little consolidation right first thing, and then you know flew up here uh, through the 2083 pivot, and then again up into the 21 range, and then consolidated a little bit. So right here, as I saw this consolidation, I did take a trade on this stock above this little consolidation range at the 2143 area, and then I looked for a break of the prior pivot and the prior high, and it actually did that just in the next few bars here of the chart, and it started continuing a little consolidation here, continuing higher, and then topped out around 2250, um, which you know it filled its gap. If you look at the daily chart, it had this gap here to fill, which it did fill, and then of course it closed above the pivot as well, 2189. So because of that, and because of this strong red bar here, you can see right here. Go ahead and put an oval right where it is. There's the volume on that bar right there, and here's the red bar I'm referring to right here. So once this bar formed and it was on high volume, actually that's the second bar, but this bar here was the first indication, and the second bar's volume started getting higher. I actually sold underneath the first big red bar to form um, after this move. So I'm actually out of Under Armour, but it could continue over the next days and weeks to show some strength. It had some big moves off of earnings, a huge bullish engulfing pattern here of this entire consolidation range. So Under Armour maybe one to watch for continuation, but I would look for a little consolidation first. I think it's a little too overextended right now out of earnings. Okay, and then a couple of stocks for today. So we have Activision Blizzard, which is another gaming stock here that actually had a good move off of earnings. Excuse me. you can see you can see the move, overnight. It spiked down all the way to 39.60. It looks like. Oops, we'll take the news off of there. There we go. So it spiked down all the way to 39.60 and actually went straight up all the way past past the close, all the way up to the 43.77 pivot here, which is pretty bullish move in the overnight. So we're going to be watching Activision Blizzard. This stock actually had a strong down move day before yesterday on some news. So on some bad news, it's having some layoffs. Actually, they're making some cuts. So the stock took a dive on the 11th and on Monday. And the other gaming stocks we've talked about that had earnings were EA Sports. It had some pretty bearish moves off earnings, but have strong have had strong. It's had a strong recovery since then. Uh, and I think Take Two Interactive as well. If you take a look, it's still weak actually, and hasn't filled any of these gaps. So Activision is showing some strength right here. So what we'll be looking for is continued strength in Activision if it shows it, right? So you have this 43.77 pivot right here, which is this low, and it has touched that pivot in the overnight. So what we'll be looking for is either a move back up to this 43.77 area with a subsequent rollover, or a break of that area with a potential gap fill. So here's the gap that we're looking at right here. Okay, it's a small gap, a couple of bucks, but worth looking at. So we have two scenarios, as usual with most earnings. It's a binary event, so a lot of times it can go either way. So if it breaks above 43.77, look for a continued move into this gap. It has a pivot here at 45.50 as well, so just keep that in mind. Look for it. You can potentially buy it right over if it shows strength and goes through 43.77. I would wait till it gets through there, which is the overnight high as well, and then you can buy the stock over the first bar that closes above 43.77 for a gap fill. Or if it shows weakness here or weakness straight off the open, we'll look for a fade back down either through the overnight low, which is at 39.60 here, um, or because it's actually that low is actually below the low that it made, um, during the day on Monday. So we'll go ahead and put a pivot there so you can see what I'm talking about. The low on Monday, it looks like it's 39.85. So we'll go ahead and let's put a pivot there so you can see exactly what I'm talking about. We'll go ahead and edit 39.85. It looks like. Okay. So that pivot right here, it could act as a level of support. So I would fade this stock if it shows weakness to that pivot. If it breaks through there and continues to be weak, you can take a look at the weekly chart. The next area of support could be right around that 35.04. It looks like 35.04 pivot. So you have a couple of targets to the downside. This move right here, though, if it's weak off the open, is about $2.50 move. That would be a pretty decent move, and probably will find support here around the 39.85 or $40 level. So that's Activision Blizzard. Two scenarios there, two things for you to think about. We also have Akamai. Akamai is showing just kind of a crazy up and then down move, and now it's kind of right in the middle, just a little bit above where it closed. So Akamai doesn't really give me a good indication of what it's doing in the pre-market, but what you can see is its daily chart, and you can kind of go from there based on the action it takes. You actually have a pivot here, which is the prior kind of high of this V-shaped base. So that's right where it is right now at 70.44. The next level of resistance on the stock is here around 71.18, which is at the 200-day moving average. And then you have this trend line. So honestly, I'd be looking for a fade of any strength on this stock to those two levels. So if it gets up to the 200-day or to this trend line, I would be looking for a little bit of a backing off of that at that area. I mean, it could show some strength, but I don't really like to see. I mean, I don't really like to trade a stock long that has this 200-day average above it, as well as a trend line, you know, which is a descending trend line. Plus, it's not really showing. It's not really opening at an area. Well, we have some time still, but it's not. I mean, it's only 8 o'clock now, but it's not opening towards the bottom or top of its range after earnings. So it doesn't give you a great opportunity for a short or for a long off the open, because it's very undecided at the moment. So Akamai, it's not the best setup, but you can take a look and see if it does get up to any of these areas for potential fade. Um, Activision, of course, looks a little bit better here. Next on the list is TripAdvisor. So TripAdvisor actually showed quite a bit of weakness, last night, and has just consolidated. Um, excuse me, has just consolidated now, kind of in this bearish, formation right at the bottom of the range. So it spiked up to 64, then spiked down to 56.40, which is right here at this pivot, and is maintaining. So if you take a look at the daily chart, of TripAdvisor, you have a couple of pivots here to go by, and I would say this is probably a good one too. The 5660 area. So you have some targets. If it's expecting to be it's expecting to gap down in the morning, right to around right here where this pivot is. So if it gaps down to this area, I would look for maybe some strength here. If it starts showing some strength, and I would look for a gap fill. Like if it shows strength off the open, I would look for it to fill the gap to yesterday's low. If it doesn't, if it shows weakness, you could get a move from 56.54 down to 54.64. Of course, if it breaks that level, you have the 200-day moving average here as well at the 54.36 area. Then you have this level, this little area of consolidation, and then the pivot at 51.02. I don't think I would want to be trading this stock short just because it's already moved down quite hard in the pre-market, and there's no clear defined pattern on the daily for a short move. So I'll be looking at this stock to see how it opens, and if there's any strength off the open. I probably won't trade it to the short side. I'll only trade it probably if it sets up for a gap fill. But for now, again, not my favorite trade, but it does give you an opportunity to take a look at a few different options for trading this morning from earnings. And lastly, we have Twilio, which I'm surprised to see showing strength this morning. Last night it was looking really good for a for a potential move this morning. Off the gap. So you can see here Twilio actually spiked in the overnight session up to about 119.56, and then had spiked down all the way down to 106.04. Well, just 106.40, which is just above the 106.04 pivot. So right around here is where it was expected to open. Right now, it's actually already bounced quite hard off of that area and is even above the 108.26 pivot, and is looking like it's right around this area. Right at this moment, it's about 112.18 area. So it looks like it's going to be opening, if it continues in this range, right around 112, 113, which that means it would have filled most of this gap from the overnight move already. So it's kind of like Disney, if you recall Disney from early last week. The way that the action was pre-market, it was very strong after a big down move in the overnight. So it's already made most of its moves, so I may not be making a trade on this, but my trade was a bounce off of this support right here, this pivot 108.26 for a gap fill. That would have been the trade if it hadn't already moved so much in the morning. We'll see how it acts, but this is a strong stock overall. If you take a look at the weekly, it's quite parabolic. It's moved. It had this huge basing pattern, and then it broke out at 70.80, and it has, had some pretty violent moves and is now kind of at the top of its range at the all-time high of 119. And that looked like a bit of if you look at the daily, this looks like a bit of baby dark cloud cover, which it has, of course, on earnings broken down from that level. But I would be looking for some strength. I mean, obviously, if it can close this gap in the overnight, I don't know if I'd be trading it right off the open. I would have to see what it does. But you have some guidelines, right? So the first, of course, target was the gap fill here, to yesterday's low, which is the 114.46 area. And then, of course, if it shows strength from there, you can look for further strength up to the 119 high. I mean, it could go there since it did make a spike above it in the overnight. but but we will see how it acts. I mean, I would assume that there would be some resistance after the gap fill, and if it did manage to make it up to 119, I would again assume some resistance at that level. So my trade on this, if it kind of meanders back down before the open, would be to look for support in this area and look for a gap fill. I don't think I'll trade it if it opens right here though. So that is Twilio. And I believe that's the last one that I wanted to show you today. There are a couple of other stocks that did report earnings, and I'll just put them up here for your knowledge. Groupon, big down move in Groupon in the overnight, all the way back down to $3.45, which is well below this area of consolidation. You also have, let's see, Occidental Petroleum, no real move there. And then you have also one semiconductor stock, Lattice Semiconductor, which is showing some pretty good strength. It's actually crossing over its 52-week high, an all-time high actually, of 890, which is right here at this level. And it looks like it's going to open above that. So again, this is actually one stock that is gapping up above its all-time high. What you can do here is what we've done in the past with Chipotle, for example, is to go ahead when it closed at 818. So we'll just put a Fibonacci here. If this ends up being the high of the overnight, we'll see. About 979. Sorry. This is okay. So you can see here you have some targets again. So if it's continuing to show strength on the open, or consolidates and then moves higher, since you don't have any real pivots up here or any guidance on the stock past the $8.90 level, you can look at these extensions, the Fibonacci from the Fibonacci. So you've got 1020 and 1080 as potential targets as well. And then alternatively to that, you could also use this as kind of a basing pattern. The move here is from top to bottom from 890 down to about 540. So that's $3.50. So you can take that and say it could move the not necessarily today, but if you were to look at potential targets from this basing pattern, from this breakout, you could go about that distance up as well for a final target from this breakout if you were to hold this stock. So that's it for earnings. We'll talk about the trades again if we take any trades on Activision Blizzard, after hours, and then you also have the Twilio potential trade as well. So we'll take a look at those this evening. And other than that, have a great day and happy